Welcome to the Knakal News Network. The Knakal News Network is brought to you by the Knakal Group, Cushman and Wakefield's #1 investment sales team.
Hi, I'm John Hageman, partner at the Knakal Group at Cushman and Wakefield. Welcome to the Knakal News Network. Today I'm here with Bob Knakal, Chairman of New York Investment Sales at C&W, and today we're going to talk about the multifamily market. Bob, in one of your recent columns, you talked about the resiliency of the multifamily market in New York, but also that there were significant headwinds ahead. And I know after that, we received a number of emails from folks asking what you meant and what those headwinds are. Can you explain?
Sure, Hags. Absolutely. The multifamily market continues on an amazing run. Demand is high, values are strong, the market keeps rolling along. And I mentioned that I thought that was remarkable because of the headwinds that market is facing. Most of those headwinds have been in the form of legislation that has gone against operators of multifamily properties. We go back to the Roberts decision in the Stuytown case. That decision basically said that if a multifamily building is receiving J51 benefits, that you can't deregulate apartments, can't take apartments out of regulation. And that was a remarkable decision because it kind of flew in the face of the operating practices of both DHCR and HPD, who are two major city organizations that oversee this rent regulation system. And if you thought it was complicated before that, that threw another wrench into things and made it even more complicated.
And with that being said, we still don't have clarity relative to Roberts.
No, that's absolutely true. I think landlord-tenant attorneys still cannot give a solid 100% answer to a property owner who says, I have a building with a J51 apartment that became vacant. What do I do now in terms of renting it? So I think what attorneys are advising clients is, well, it depends on what your risk tolerance is. And if you are a risk avoider, do this. If you're willing to take some risk, do that. If you're willing to take a lot of risk, you can do this. But nobody really knows what the answer is because the decision just said that you can't do the deregulation. It didn't say how you handle apartments that become vacant and how to administrate them.
Bob, another decision that we talk about recently quite a bit is the Altman decision. Can you tell our viewers about that?
Sure. Altman is another decision that basically upended a decades-long practice of figuring out what the legal rent for a new apartment was. Typically, when a rent-regulated apartment would become vacant, the owner of the building could add the vacancy allowance to that monthly rent, could then add 1/40th of the individual apartment improvement cost to that rent. And if that new legal rent got over the deregulation threshold, the owner was allowed to rent the apartment at the free market level. When the Altman decision came out, the court essentially said that when a unit becomes vacant, you can't just add the IAI and the vacancy bonus, and if you got above the threshold, you'd become deregulated, that you actually had to have a tenant in the apartment that paid a rent that was in excess of the threshold and then become vacant. So again, a very long-term practice of dealing with vacancy has been upended. And now apartments where you could have gotten the legal rent to just over the threshold with the IAI and the vacancy bonus and then rented the apartment for 2 or 3 times that amount, that's no longer possible.
So Bob, with all this being said, it sounds like the multifamily market is in a constant state of flux, so to say.
It is, and another most recent decision was the Altshuler decision, which is another thing that changed the way owners operate these properties. And it said that even if you have an apartment that has been rented by a string of free market renters, that there is a possibility that the rent could be rolled back and the owner would be subject to treble damages and overcharges if the unit was not deregulated in the proper way. So all of this has led to tremendous uncertainty about how to operate multifamily buildings, but yet the values keep going up. Demand for the properties remains high, and it just seems like there's no stopping this marketplace.
And with that being said, is there anything that you think you can point to that would upend that?
It's really tough to say, Hags. As you know, our markets are cyclical, and what goes up comes down and goes back up. If the market generally has a downward trajectory, naturally multifamily properties will be affected. But if these 3 court decisions haven't made a tangible negative impact on the market, it's hard to imagine what that could be. But I think it's becoming increasingly difficult for folks to operate these properties, and that's why a number of our clients are actually selling today, as you know. In summary, the multifamily market has remained resilient and surprisingly strong. In the face of court decisions that have made it increasingly difficult for property owners to operate these buildings, demand remains high, financing is plentiful, and values are continuing to rise. As remarkable as these dynamics are, there is nothing on the horizon to think that things are going to change anytime soon.
Thank you for joining us today. Tune in next week for another episode of the Knakal News Network.